The intelligent investor sells to optimists and buys from pessimists. Benjamin Graham, one of my favorite investors of old. He has such great quotes. And folks, that's what we do. We try to be the realist investor. We're not pessimists. We're not optimists. We are realists. And how do we become realists? By focusing on the charts, because the charts are reality. And it's not that we like them or hate them. It's that we know they are reality. They show us price movement. Not the news, not what someone's trying to get you to believe, but what's actually happening. And we find patterns. We look for trends and we follow those trends. Trends have discernible patterns. When we have weekly vertical crossovers going down or going up on our weekly chart, that is one of the biggest trends that we see. And what we do when those occur is we follow them. Now, let's jump into where things are now. I will tell you that both of our stock indexes, the S&P 500 and the Nasdaq 100, the tech stocks, are down for the day. Up for the week, we see that TLT 20-year bonds up for the day and a little questionable for the week. And gold is down for the day but up for the week. Let's jump first into the S&P 500. What do we see going on there? Well, we had a weekly vertical crossover back on the week ending the 24th, the last week, the 24th of May. Then we had a nice, strong down week with a wonderful trading opportunity. And then what happened? We had a green spinning top, lots of indecision tending up. Then we had a great deal of up movement during this past week, but not enough to cause a crossover going up. In fact, ended weak. We see the derivative oscillator still quite negative. Price percent oscillator is heading up toward the red signal line, but hasn't crossed over. We have a strong green up candle with a wick on top, no wick on the bottom. We go to the 2-day chart. What do we see there? Well, yesterday when we looked at the 2-day chart, we noticed that it was only the first day of the latest 2-day candle. Now it's completed, and we see basically a stalling. We have a red open box, not a strong down candle, but a red open box, meaning a pullback and caution on more up movements. Derivative oscillator still gaining upward momentum. Price percent oscillator still heading up on that 2-day chart, because the 2 days now moving the opposite direction of the weekly. Even though the weekly is still a downtrend, the 2-day has gone in opposition to that, so we don't have a possibility of jumping in on a trade right now on the S&P 500. We're waiting for that to shake out. Look at what we see over many, many days on the 4-hour chart. Each candle on the 4-hour chart represents a half day of movement. And it's very interesting because it's really just moving along sideways for many, many days. We can see that the derivative oscillator went negative at the end of the week, the last 4 hours of the trading week on Friday, and the price percent oscillator is heading down. Is it going to cross over going down in the new week? Don't know. Know that our largest chart is still down. Intermediate chart, that's the 2-day, is up, and the 4-hour chart still up, but looks like it's just sliding sideways for now. So things are in transition. We're going to see how they sort themselves out. All things being equal, the markets tend to move in the direction of the largest chart, which of course is down, but we're not going to pull the trigger on any down move until that is confirmed with the 2-day moving in the same direction as the weekly. Now the Qs, what do we see there? Down much bigger for the day. The S&P 500 down just 0.11. Q's down 0.43, and we see that we do have, again, an up candle. Again, not as high as where things started moving down as far as the candle body itself. We did see some price during the week go that high. Price percent oscillator heading down, not up like on the S&P 500, and the derivative oscillator is gaining downward momentum. So we did see a pullback over the course of the week, but again, things still heading down. On the 2-day, it ended the 2-day with a crossover going up. So that takes us out of the ability to actually jump into an up trade unless there's some huge down movement on Monday, which could actually pull this back through, but that is typically not likely, not something that we usually see. So we'll go ahead and call it as we see it. If things do change, if the week really starts off hammering down with all the crazy stuff going on in the world, that might actually give us an opportunity. We have seen that happen before, where with a strong down move, that blue line, that is our price percent oscillator, pulling back through the red, but the derivative oscillator gaining upward momentum, so is the price percent oscillator. We'll see just how that shakes out. Now we go from the 2-day to the 4-hour, and again, just this long sideways slide for many, many days. Price percent oscillator is heading down. Derivative oscillators have already gone negative. So we'll see how things sort out over the course of this next week with both our stock indexes, and if they give us any ability to jump into a trade. Let's move on to bonds. 20-year bonds up for the day, 0.25%. Overall in the week, red open box candle, just sort of a cautionary candle after having several weeks of strong up movement, where we saw the price percent oscillator bounce off the red signal line, derivative oscillator continuing to gain upward momentum, price percent oscillator continuing to head up. What's going on the 2-day chart? It's pretty flat, still heading up just a little bit. Derivative oscillator still losing momentum. We can see basically 8 days worth of sideways sliding movement, price still above the weekly, and not really much going on. I mean, we could try to redraw that 2-day trend line, but it'd be not much to go on there. So we'll just continue to watch and see how things are going to break out, whether up or down. Now, of course, we're waiting for a breakover going up if that happens, because the weekly and the 2-day are still in confirmed up moves. If there is enough strength to cross over going up on that 4-hour chart, it could give us the ability to jump into another up move on bonds, but just not enough strength yet. Let's go back to the weekly chart. And of course, we will go to gold, just barely down 0.03% for the day, an up week for gold. We can see that the body closed higher up, and can't quite see. Yeah, we even had the wick on top close higher. So gold had a higher week overall. Price percent oscillator still heading up. Derivative oscillator gaining upward momentum. We look at that 2-day chart. What do we see there? Of course, we had a pullback. If we could find some way to redraw a decent trend line. Of course, we always want to connect 3 candles if possible, but we can go ahead on that 2-day chart, try to connect 2 and at least get some kind of workable trend line. Price percent oscillators been heading up about the same angle for the last several 2-day candles. Derivative oscillator also gaining upward momentum in that last move. Price, however, yeah, just barely edging above the prior two-day candles prior. And we go to the 4-hour chart. What do we see there? Hoping for a crossover and then a pullback in the afternoon. So didn't have a jumping in point, trying to have one, but just couldn't quite do it. Red spinning top for the end of the day. See how the next week starts off, and if we'll have an ability to jump into an up move on gold. Just couldn't sustain that push through. So that's where we are, folks, as we end the week. Again, a lot of things in transition, a lot of important things going on in the world geopolitically, with oil and gas and Iran and all the other stuff. Those things can weigh heavily on the market, and typically that kind of stuff to the downside. So again, be ready. Typically with downside, crazy things going on, stock market might take a hit, and of course, bonds and gold might see some strengthening. So the charts will lead us. Not going to let the news fool us, but be aware, watch those charts, and let's see what they tell us to do. You want to know more about what we do? Great trainings for free at the website chartingwealth.com. Go ahead and sign up for our newsletter. You'll get our trainings as they come out every single day, our daily reviews plus special trainings that we do for you. If you haven't purchased our book, Charting Your Way to Wealth, 11th printing arrived at the office yesterday. I am out traveling. I will be back. We're getting all the newest orders fulfilled there on Monday. We so appreciate you being with us. If you want to be a Patreon supporter, you can find a link in the show notes to purchase the book. You'll see a link in the show notes too if you live overseas and want to buy the book. Email us cw@chartingwealth.com. We will send you a PayPal invoice. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.